Yasuirini. Hi, everyone. Okay, so it's a nice chat here. We can all see the chat. Excellent. Hello, Paul from Philippines, South Africa. Bonjour. Hello. All right. Togo, nice. Worldwide crowd today. Excellent. We have South Africa. Unfortunately, the session is in English, not in French. Costa Rica, nice. Netherlands. Haha, Emil, how are you? Long time, my friend. Hope you are well. How is lockdown in Netherlands? Excellent. I think it's the best place to get a lockdown in Netherlands, yes? Amsterdam especially. Here we drink coffee. All right, excellent. Okay, so hope you can hear me well. Didn't mute this thing. All right. So today we are going to talk about swing trading. Some of you already might be familiar with it, but it's going to be a good revision. And I'm going to show you a nice toy that I have to use, a new toy, which is very good in finding trades. And of course, the markets are exciting, guys. Huh? It's very nice. Of course, in lockdown, my haircut was done by my wife, so hope you like it. Okay, so let's go. So who are we? In Tradepedia, we are certified instructors, we are certified traders, and we are software developers. And we have developed an educational system based on technical analysis, risk management, and behavioral finance that we teach to our students. So, of course, these are some of our clients and partners. For those who don't know us, I have taught practically every bank in the region and more. And the first question I want to ask you, I know you are all on lockdown, but why are you here? So what's the main reason you are here? You can type for me. All right. So we are here to learn, to be a profitable trader. Okay, to learn more, to make money, for a bonus maybe. Well, not for the free lunch. This is an old slide. So the thing is, why am I here? Well, I am here to share with you how to identify the tops and the bottoms. So you know that in every technical analysis book that you read, they mention that an uptrend is a series of higher tops and bottoms, right? And however, in no book that I have read do they explain how to find the tops and the bottoms, right? So if you don't know how to find the tops and the bottoms, then how can you identify the trends, since the trends are nothing more than higher tops and higher bottoms. So I had to personally discover the conditions for objectively defining the correct tops and bottoms. So identifying the correct tops and bottoms is an essential part of any method that uses price action pattern recognition, right? So, types of charts for the ones that are not very familiar. So price action can be illustrated on a chart using a line chart, using a bar chart, or a candlestick chart. Our favorite, of course, is the candlestick chart. So let's see what happens in a candlestick chart. So, okay, we have these things that they call candles. They are very popular way of charting, and it shows all the important price elements. But what are these elements? Let's see them in detail. So let's say that the euro or DAX or whatever it is that you are trading opens today at 132.5. Then during the day goes up to 133, which is the high of the day, to then come down to 131, which is the low of the day, and finally close at 131.50, which is the close of the day. So now this is the most important information that we need to see. Let me just fix the camera a bit. But how to see it on a chart like this is not very easy. So what we do is we take the open and the close and we draw a box. This box is called the body of the candlestick. And the high and the low, we show them with vertical lines from the open to the high and from the close to the low in this case. And these are called shadows or wicks. Now, if we take the anatomy of a candlestick, how is the anatomy of a candlestick? So we have the open, the close, the low, and the high. But how can you know which is the open and which is the close and which is the high and which is the low? Okay, the high is easy, it's the weak high. The low is easy, it's the weak low. But how can you know on the box which is the open and which is the close? This could be the open and the close or open and close. So the way we do this is using the color of the candle, right? So the first thing we do is the color of the body. Well, the normal is, if it's green, it means that the close is higher than the open. And if it's red, it means that the open is higher than the close. So the first thing we care about is the color of the body. The second important element in a candlestick is the size of the body. Yes, you need a big body like mine, right? Is more important than a small body, at least in candlestick language. Okay, so if we have a candle with a small body, it's not very significant. It's not giving us a very significant signal, yes? Okay. The candlesticks. Now, the third thing that we care about is the length of the shadows, but we're not going to focus a lot on this today. So now that we know what a candlestick is, the most important thing is to define when a candle is large and when a candle is small, yes? So when discussing large or small candles, we are referring to the size of the body, not the shadows, just the box. So whether it's green or red doesn't matter. So a candle is considered large when the size of its body is of significant size relative to the last 30 candles, let's say. Okay, so we compare the current body size with the last 30 candles and we take an average to see if it's a big body or if it's a small body. So, for example, this one here, if we take this, I'm not sure that you see my mouse, so I am going to annotate instead. So if we take this candle here and we compare it with the last 30 candles or so, we see that this one is larger than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. So it's larger than 22 out of the last 30 candles, right? So it's definitely considered a large candle. But if you take this one here, for example, this is definitely not considered a large candle. Clear? So you compare the current candle, of course, in this example, the last candle, with the last 30 candles to decide if this is a big or if it's a small candle. Okay? And this is how we define the size of a candle. Now, after you have identified that a candle is large or not, you are now on your way to identify the tops and the bottoms. So let's see, how do we identify a top? So, of course, you have to start somewhere. So we are going up, tralala, tralalo, and then the minimum requirement to identify a top is to have at least 2 large candles, yes? So that means that I need to see one candle after a high. I look for one candle that is considered big, like this one, but I need another one. So now that I have my second candle, this is the minimum requirement to say that this thing here is a top. Okay? So this and this candle is the minimum requirement to say that you have a top. But that's not enough. We have some more rules. So the other rule is that the second candle must have a lower low than the previous large candle and must also have a lower high than the high of the previous large candle. Yes? Okay, is it clear? So our rule is that we need to have 2 candles at least that are large, and since I'm identifying a top, they have to be red, meaning going down, okay? And the low of the second large candle has to be lower than the low of the first large candle, and the high of the second large candle has to be lower than the high of the first one. Clear? So once you have that, then you can call this thing a top. Now, the candles do not have to be consecutive. Consecutive meaning one after the other, yes? So, for example, here I have my first large candle, but look at the next one. Not only it's not maybe large, it's actually green, yes? So what does that mean? It means that I definitely don't have a top yet. But if the next one is large and is red, and it keeps the rule of having a lower low than the first. This is the first and this is the second large candle, yes? So we want the low of the second to be lower than the low of the first and the high of the second to be lower than the high of the first. So if we have this, then we have a top. Okay, so the candles do not need to be consecutive. Now, another special case is that we have here this, what's happening here? So I have my first, I have this, and this is my first candle, right? But look at this. This high went above the high of that one. That means that now you have to look for two big red candles after this top here, not this one. Okay, so this is my first, and I'm now looking for a second one. So let's see. There it is. And then I check if the high of the second one is lower than the high of the first one, and the low is lower than the low. If this is the case, then I can say that I have a top. And where is the top? It's that shadow there, not that one over there. All right? And now the fourth and fifth special cases are these. So you are going up, tralala, tralala, everyone is happy, everyone is making money, and then suddenly you see one large candle, right? But we said that's not enough, I need a second one. But what happens is the second one is straight and breaks the last bottom. So from the moment this happens, then automatically this becomes a top. The same rule applies when it breaks the bottom with one candle. Then automatically this becomes a top. So this is how I identify the tops and the tops in the market. And of course, the bottoms is just the opposite. So the minimum requirement to identify a bottom is to have at least 1, 2 large green candles. And of course, we want the high of the second large green candle to be higher than the high of the first, and the low to be higher than the low of the first, right? And then we can say that we have a bottom. Needless to say, they don't have to be consecutive. So I can have one large, then another one, or maybe a few more, and then another large one. And as long as the high of this one is higher than the high of the previous, and the low is higher than the low, then we have a bottom. And then again, the special case where we make a new low here. So if I make a new low here, I have to count from this point and to the right. So this is my first candle, and I need to see a second large one. Even if this is large, the high is not higher than the previous one, right? So this one, however, is not only large, but the high is higher than the high of the previous one, and the low is higher than the low, meaning that we officially have a bottom. Clear? And of course, the special case of the second candle breaking the top this time, which automatically makes it a bottom, or with one candle, one huge candle, we go and we break the top, making this again automatically a bottom. And this is how we identify the tops and the bottoms. Is it clear? Excellent. So once you know how to identify the tops and the bottoms, this is an example, then you can find the trend, can't you? Right? So here, for example, let's have a look at this example that I have here. I'm starting here, I'm coming down, I'm coming down. Why is this not the bottom? Because this candle is small. And not only that, the high of this candle does not go above the high of the other one, yes? So no bottom here. And then I come down here where I have one candle here and another one here, creating this bottom here. And then someone might say, then why is this not a top? Well, that's not a top because there is no two large red candles going down. And it's a good thing that you didn't say that is a top because the market then continued higher. Now, here is an example where we have the first the red candle, but the next one creates a higher high, right? So now I'm looking for two large red ones from there and to the right, meaning that this one here I ignore and I have one large there and another large there, creating this top. So with the same logic, you can continue and identify the bottom and the top and the bottom and the top and so on, right? And once you have done that, then you are able to identify the trends. So let's now see how we identify a trend. So what is a trend? The trend is simply the general direction of the market. That's as simple as that. So, but the markets, of course, do not move in a straight line. They move in zigzags, creating tops and bottoms. It's the sequence and direction of these tops and bottoms that identifies the trend. So price movements can develop in three directions. What are they? Up, down, or nowhere, right? Or uptrend, downtrend, and range. So let's see them one by one. So an uptrend is defined as higher tops and higher bottoms. So what do we have here? We have our candles, tralala, tralala, it's going up, and then we have 1, 2 red candles with a lower high and a lower low, creating my first top. Then the market comes down and I have my first bottom. Goes up, creates my second top, and then creates my second bottom. So from the moment I have one top higher than the previous one, yes, and one bottom higher than the previous bottom, then from the moment the price goes above the second top, then I have an uptrend. Yes, I officially have an uptrend. And for those of you that have heard me talk about trends before, for how long is this uptrend going to continue? It's going to continue going up forever. Very good. So from the moment we have identified an uptrend, this uptrend is going to continue going up for how long? Forever, yes? So as long as I have higher tops and higher bottoms, this uptrend will continue and the market will continue going up forever. Clear? All right, very good. So the downtrend, of course, is just the opposite. When I have one top lower than the previous top and one bottom lower than the previous bottom, then from the moment I go below the second bottom, then I have a downtrend, and this downtrend is expected to continue going down forever. I'll explain later why I say forever. It's a good example now that we had the case with the indices that we are all going in a downtrend, yes? So in a downtrend, but we'll talk about it after we talk about the range. So in a range, what do we have? Horizontal tops and horizontal bottoms, meaning the tops and the bottoms, they are more or less at the same level. So when they are at the same level, it means that I have a range or a sideways market. And this is why we say a trend is more likely to continue than to reverse, or the trend is your friend. Never go against the trend. So by following trends over different time frames, traders can increase their profit-making opportunities. So now that we know what a trend is, there are 3 decisions that we can make, right? What are they? When to buy, when to sell, and when to do nothing. So when are we allowed to buy? We are only allowed to buy in an uptrend. Every time it comes down, we buy. Every time it comes down, we buy. Every time it comes down, we buy. For how long? Forever. And we are only allowed to short in a downtrend. So, and what's the most difficult thing for a trader to do? Is to do nothing. So when do we do nothing? When the market is in a range. And by nothing, we mean we do nothing on this instrument. Yes, the market has thousands of instruments that we can trade, that they trend, and we can just go and trade one of those. Clear? Okay. So, however, the trend does not go up forever, like I jokingly like to say, of course. So the market is in an uptrend, and then the uptrend is going to reverse, and it's going to go into a downtrend. So let's see when forever finishes, right? And this is what I want you to focus on, because this specific reversal pattern that I'm going to show you now, provided you use it with the correct tops and bottoms, is up to 80% accurate, yes, depending on the time frame you are trading. The higher the time frame, the more accurate this signal is. So you know Dow theory, you know gun theory. Let's see Avramis theory. So what do we have? We have a downtrend, which means that we have lower tops, T4, T3, T2, T1, and lower bottoms. B2 is lower than B3, lower than B4, and lower than B5. So this is the perfect downtrend. We'll see many examples afterwards on our platform, yes? But for now, I want you to focus on the clear picture that I have here. So what do we expect this thing to do? We expect it to continue going down, right? So we expect it to go below B2 and continue going down. But look at this. Instead of going below B2, something happens. We have a bottom higher than the previous bottom, yeah? Interesting. So what does that mean? What does this do in the market? Well, what it does is that we no longer have lower bottoms, right? This is the first thing. The first thing is that we no longer have lower bottoms. The trend is not gone completely. It's so and so. So when is this downtrend going to be completely destroyed? Well, it will be completely destroyed the moment I stop having lower tops as well. So when am I going to stop having lower tops? I will stop having lower tops the moment the price goes above T1. So the moment the price goes above T1, I will no longer have lower tops either. And at that point in time and space, sorry, I was reading something there. The downtrend has been destroyed, yes? So can be specific on the time frames. Oh, this is a free seminar. You have to pay to learn time frames. No, we will talk about time frames when we go to the real market. Yes. All right. So for now, forget time frames, forget what you have in your mind. Okay, this can be the 1 minute chart, it can be the 1 month chart. I don't care. Okay, I just care that you understand this pattern. Yes, that we have a bottom higher than the previous bottom and we go above the last top. Is it clear? Yes, I understand, Osama, it's your favorite pattern, but you know what the problem is? I will tell you a story. So when I first started learning technical analysis, I had a teacher like I am teaching you, okay? And he taught me the head and shoulders, which is similar to this formation. So let's use this as an example. And he told me, okay, top, bottom, when it does this, you buy. Yes, okay, all right, excellent. I love it. So one day I see a top, a higher bottom, I buy, market comes down and I hit a stop loss. I call him to tell him, what did I do wrong? And instead of telling me, okay, these things happen and so on, he goes to me, no, you were wrong. This was not a top and this was not a bottom, so you shouldn't have bought. All right, teacher, thank you very much. After 2 weeks, he calls me, yes? He goes to me, Avramis, did you buy the euro yesterday? No, I didn't buy. Why you didn't buy? Because it was the same pattern as last 2 weeks ago, and you told me it was not a top and not a bottom, so I shouldn't have bought. No. You are wrong. This was a top and this was a bottom, so you should have bought. Do you understand what I'm saying? It's easy to say top, bottom, you buy, but you need to have a mechanical way, a correct way to find the tops and the bottoms objectively every time. Otherwise, you can't say anything is a top, anything is a bottom and trade. Do you understand? And this is actually what this tool that we have created does for you. Yes, it identifies the tops and the bottoms in the market objectively, consistently, but we'll talk about that later. Okay, so our first pattern is I have the top, I have the bottom, it swings, and then the trend reverses. So let's make a test. When we have the market like this, what's the direction of the market? Is it down, up, or range? What's the direction? It's a downtrend. Very good. So when the market is like this, what's the trend? Is it up, down? What is it? Is it an uptrend? Is it a downtrend? Is it a bird? Is it a plane? What is it? Still down. Very good. Since the tops are lower, the bottoms are lower. Yes? Only when we see a bottom higher than the previous bottom, yes? Okay? Can we say that something is changing in this downtrend? So here it's not that clear. It's so and so. And when it goes above T1, then we have a clear reversal in the trend. Now, the opposite, of course, quite simple. I have an uptrend, so first I need an uptrend. And instead of the market continuing higher, I have a top lower than the previous top. So when I see this, it means I no longer have higher tops. Something is changing in my trend. It's not an uptrend anymore, because to be an uptrend, both the tops and the bottoms have to be higher than each other. So here, something is changing. And when will this uptrend be completely destroyed? Well, this uptrend will be completely destroyed the moment I go below B1, right? So the moment I go below B1, I will no longer have higher bottoms, and this destroys the uptrend completely. And tralala, tralalo. So when we see this, what's the direction? Direction is, what's the direction? Up. Very good. So when we see this, what's the direction? Again up. And when we see this, clear up. Now, when we see this, up with a question mark. Yes, you could say that. Weak up. This is weak up. Number 7 is weak up because T1 is lower than T2. Is it clear? And when is the trend going to be reversed? The moment we go below B1, then the trend is reversed. Clear? All right, very good. Now, let's put it all together and then we'll go and see some examples. Actually, we can see some examples now. So let's go and open everyone's favorite instrument, I guess, which is gold. I'm going to start from the monthly chart. And I want someone to help me identify the tops and the bottoms. So if I was to start from here, yes, how would it be? How would I start? I would have, let me take my line here. So I start from here and I'm going up. Is this here at top? Well, 1, 2 candles. Yes, I can say it's a top, right? And then I'm going up, and here I have a bottom and then a top, and then I have another top. So from the moment the price went above this level, then I have an uptrend, right? Comes down, then it goes up, and then it comes down, and then it goes up, right? So what do I expect the market to do here? I expect it to continue going up, right? For how long? Forever. So the market goes up there, and then what happens? The market comes down here, right? And then it goes up again. So what do I expect the market to do here? To break the top and continue going up, right? But what happens here? Instead of doing that, the market creates a top. It's actually there. Yes, the top can be the same candle that we use, right? So we have a top lower than the previous one. So what does that mean? It means that the moment the price goes below this level here, then we are going to have a reversal of the trend. Okay? And let's see what happens. Tralala, and there you have it. So at this point in time and space here, we have a reversal in the trend. And what happened? The market went down, created a bottom, and then continued lower, and then created a bottom here, right? And what do I expect the market to do? Okay, it went up there, and now I expect it to break the bottom and continue going down, right? But what happens here? I have a bottom higher than the previous bottom. So here I can say that the moment the price goes above this level, then the trend has reversed and I will be going up. Yes? So this is how we use the swings in the market to buy and sell. So here you would sell at 1520, let's say 1500, and the market went almost 1000. Yes, that's $500. That's 50% return on one lot without leverage. And the entry signal to go long was at 1375, and it went all the way up to 1700. Yes, that's another 300 something dollars. That's another 30%. Isn't that nice? And tralala, tralala. So this is the way we use the swings in the market: swing down, swing up, and tralala, tralala. So let's go and put it all together. So the way that I like to trade the market, and I recommend you to also use this methodology to enter and exit the market, is this here. So we are going tralala, tralala, the market is coming down, and then I have a bottom higher than the previous bottom. So what do I do here? I have my entry level. So where is my entry level? My entry level is T1, and my stop loss is at least B1. Yes? Okay, clear? So this is my entry and this is my stop. And then when it goes above T1, I have my targets, which we use Fibonacci to get the targets. I'll talk about it in a minute. But when it reaches the first target, what we do is we close half our position and move the stop loss from B1 to the middle between the entry and the stop loss level. When we do that, what does it mean? It means that if the market comes down to my stop level, I will have made this much on half, lost this much on the other half, overall made a little money. Is it clear? And if the market continues and goes to target 2, I will close the remaining 50% of my position. Okay? Now, of course, there is a target 3 there, but that's when you grow older, right? So when we learn, how do we learn? Kindergarten, where you are, then junior school, then high school, then college, then master, then PhD, then Avramis, yes? So until you reach that level, I recommend you close half on target 1 and half on target 2 and leave target 3 for me. Is it clear? Now, the trend reversal to go short now is of course the opposite. So I have a possible swing to go short. This is my entry. This is my targets, target 1, target 2. When it goes to target 1, I close half my position and I move my stop loss to the break-even point. You can even move it to the entry level if you like. Yes, I'm fine with it. What you are not allowed to do is to lose money after the market has reached target 1. Yes, so from the moment the market reaches target 1, the worst thing that can happen to you is to not make money. That means you must definitely trail it at least to the break-even point somewhere in the middle. And when it reaches target 2, you close the remaining 50% of your position, and tralala, tralalo. Is it clear? Yes? Okay. Now look at this. I'm not going to go through the theory of Fibonacci because I don't know if you know, but in our YouTube channel, okay, so just you can find Tradepedia YouTube channel. We have all these nice videos here that you can watch now. Many people are in lockdown, so something to do to learn more, to increase our knowledge, okay? And you can come to 4.6b at least, which talks about Fibonacci for supports and resistances. And it's a very nice video. You can see how the Fibonacci is calculated, okay? And then you will be able to also see how we use it. Clear? So feel free to go to our YouTube channel and watch all these nice videos. Now, for now, I'm just going to go back to my platform here. And remember, when we said that in this example here, what would I be doing? So what would I be doing in this example? I would sell below this point. So what do we do? Just see how we use it. We take the Fibonacci tool and we place it from the bottom to the top, yes? Always from left to right. So I take it from the bottom to the top, yes? And this is my stop level, this is my entry, and then target 1, target 2, and target 3. Okay, so 161, 261, and 423.6 are my targets. Is it clear? And let's see what happens. So it breaks the level, and look at this, it reaches target 1 automatically. So what do we do when it reaches target 1? Well, we close half our position and move the stop loss from there to the break-even point, which is actually in the middle there. I can change the parameters of my Fibonacci. Let me show you how you do that. So you can come here and you can put the 0.50, so that's half between the entry and the stop, as your trailed stop loss. So here you would move your stop loss after you close half your position there. So what will happen if it hits the stop loss? Well, you shorted at 15.20 and you closed half your position at target 1, which was 13.70, let's say, right? So you made a profit of $150. So your stop loss is at 16.60, which is $140 from your entry. So if you hit a stop loss, you would make 30 on half the position. Is it clear? Or if you are lucky, it can continue and reach target 2, whereby at 1090 you would close your other half of the position and you would have pocketed another $520, right? So you make $520 on half the position, and then you made another 150 on the other half. That's a total of 520, 150, 670. divided by 2, that's about $335 on the total position. That's a 35% return, yes? That's not bad. And then what do? You close your position. Sorry, I lost everything. You close your position and then you look for the next opportunity to trade the market, right? So when is the next opportunity to trade the market? Well, let's see. When did we get it? Control Z is not working. There it is. So then what happens? The market went up, came down, and created this. So what would I do now? Now I would put my Fibonacci from the top to the bottom, and my entry is 1375, and target 1 1523, and target 2 1783, right? And then what do? I open my platform, I enter the order to buy, tralala, tralala, and then I wait for a lot of months before it breaks and reaches target 1. So after it has reached target 1 here, where is my stop loss now? Well, originally it was there. So now the minimum it should be now is here, but with the market having gone all the way up there, you can even put your stop loss at the entry level, meaning that no matter what, you will make money from this trade as well. Is it clear? And tralala, tralala. Easy peasy lemon squeezy. All right, good. So this is how I like to trade the market. So where I can see your questions, where can I see your questions? I lost them somewhere. I have to find them again. There you are. Okay, clear. All right, good. Yes, tralala, tralala. All right, perfect. So now we will go and do some requests and see some examples of anything you want to see. So where did you lose money lately? So where would you like to apply this knowledge to? Okay, so let's start with the euro. Okay, so if I was to go to the euro on the daily, let's start from the daily time frame. Okay, I would now have to go and identify the tops and the bottoms in the market, right? Ooh, okay, euro, oil. Okay, we'll have a look at all of them, yes? Now, as I said before, the issue is to try and find the tops and the bottoms, yeah? Okay, now it's time to show you how we really find the tops and the bottoms. And the way we do it is by using this nice tool that we call Avramis Swing, yes? Avramis Swing, okay? So the Avramis Swing Indicator is doing just what we said before, yes? It's identifying for us the tops and the bottoms in the market, okay? So for example, if we come, yes, automatically, Ohaga, this is the idea, yes? So you just, I have a template that I applied, but I can show to you how it's done. So we have this indicator, which is called Avramis Swing MTF for the MT5 platform. So you just come here, right, and you apply it, and tralala, it will calculate for you automatically the tops and the bottoms. And now, because this is when you grow older, I will just use a template that I have that hides a lot of the information, yes? Well, we have it for MT4 as well, but you will understand why it's much better on MT5 in a minute. Okay, so MT4, MT5 is the same thing, guys. Okay, but MT5 has something that MT4 doesn't, that I will tell you in a minute. So for now, we have the swing, okay? And let's see what this market is doing here, right? So what's this market doing? It's going up, tralala, tralala. So we have an uptrend, higher tops, higher bottoms, right? No, you cannot find it in XM because this belongs to Tradepedia. And look at this. We'll talk about all that later, guys. Please focus here. So the tool is finding the tops and the bottoms for me, okay? And here, what happens here in the end? Here in the end, I have a top, yes, that is lower than the previous top, right? So what does that mean? It means that the moment it goes below B1 is my entry. Oh, and look at this. The nice thing is that the indicator will automatically put a nice big arrow for you, okay, to show you that there is a trade. And we'll all even tell you this is the stop, this is the entry, and this is target 1 and target 2, right? So here we execute the trade. Okay. So let's follow this trade, sorry, one by one. So we took the trade. Yes, and then what happened? It reaches target 1. So when it reaches target 1, what do? The stop loss that was originally here, we move it to the middle of, which is somewhere here, yeah? The market went up, didn't hit my stop loss, and then reached target 2. So when it reached target 2, what do? You take all your profit, yes? Now, I would have kept it until target 3, but that's when you grow older, we said, yes? So you see, but look at this. It reached target 3, and look what it did after that. Showed up, yes? Okay? And there was no other trade in this instance. So after it reached the target, then it did some crazy things. And now when the indicator is gray, and you see here it's saying it's a U, the trend is unidentified, right? Well, target 3 is only for me because I know more things, yes? And I'm older, bro. Okay? So there are more conditions, more things that you need to know to be able to say it's going to reach target 3 or not, yes? But it's fine. Come on, don't be greedy. Target 1, target 2 is good, right? Okay? All right. So now, if we go further lower in the time frames, so let's go to the 4-hour time frame now. Yes, what happened in the euro actually this week? Yes, so if I go back in time, what happened here? It's a downtrend, tralala, tralala. Everyone is happy. everyone is making money, yes, goes up, and then what happens here? Let's make it more fun. What happens here? Oh, come on, one by one, right? I need to press this button, press, and this, okay. So, okay. There we had our entry at 1:10.90. Yes, again, the indicator will wake you up. Hello, this is the entry, this is the stop, target 1, target 2, target 3, right? So when it reaches target 1, what do? You close half your position and you move the stop loss from there to the middle, right? Clear? And when it reaches target 2, you close the remaining half of your position and you leave target 3 for me. Don't forget that, right? Okay, so what did you do here? You bought at 90, you closed it at 70, which was target 1. You made 80 pips and then you closed the rest at 111.10. So you made another, I don't know, 120? No, 220. Yes, 220 and 90 pips, 310, divide that by 260 pips, right? That's not bad. All right, clear? So this is another example on the euro dollar. I saw before some people wanted, okay, the euro, okay, we've seen it. Of course, you can go to the hourly time frame and you can find more trades on the hourly time frame. Like we had probably one here. Yes, correct. So here we had a signal on the hourly, reaches target 1. Yes, maybe it came and hit you on the 50%. You were lucky, it didn't do it. Okay, and then it went and reached target 2. Clear? And tralala, tralalo. So gold, let's have a look at gold. So if we go to gold, we are in the hourly. So what trades did we have in the gold? Let's go a bit further back in time. So what do we have here? I went too far back. Okay, so gold, tralala, tralalo, is going down. It's a pure downtrend and down and down. Okay, this is another strategy, guys. It's following the trend and going for the breakout. It's not for you. It's when you grow older. Okay, and here, what do we have? We have a reversal, yes? Reaches target 1 and then it hits your trail stop loss, right? What does that mean? It means that you did not lose and you made very little money. This is a very good example to see that you must always close half your position on target 1 and then trail at least to the break-even level for the remaining of your position. Is it clear? And tralala, tralalo. So let's see if there is anything brewing today in the hourly. There is nothing really. Let's go to the 4-hour time frame. Oh, nice swing here. Yes. So you see on the 4-hour time frame, what happened here? We had tralala, tralalo, we were going down, yes, and then we swing and we break the top here, and here we have reaching target 1, and now our stop loss is here in the middle, and or actually, since the market has stopped up there for so long, I would put my stop loss at the entry level now, yeah? So that means that I have made $60, and no matter what, I will not lose on the other half position. So overall, you make $30. Is it clear? All right, so let's have a look at S&P. Where is S&P? US 500. So that's Siri. So let's see S&P 500. We go back in time. Nothing on this time frame. Let's go to the hourly time frame. Okay, this is an interesting case here. So what was happening here? The market was going up, tralala, tralala. You have a short trade here. It didn't reach target 1, and now it's going to go and probably hit your stop loss. Yes? Remember, we are not 100% accurate. Is it clear? Yeah, well, yes, unless you have an algorithm to do it for you, which is another story, the moment the market reaches half your position, sorry, what happened here? You market watch. So let's look at another example. So for example, here, this was another example. What happened here? Market was coming down, and then we break this level here, right? So look at what we do. We enter at 7704. What you can do is you can take 2 positions, yes? Let's say you trade 1 lot. You can take half a lot and half a lot, yes? So when the market reaches target 1, the half a lot, you will put it with target 1, stop loss, it's finished. The second half, you will put it with entry here and target 2. So all you have to do after the one of the positions closes is to change the stop loss of the second position to, now since we closed half, to the middle over there. Is it clear? What do you mean 80% is good enough? I didn't understand. So let's have a look at some more examples. So let's go to German cash, which has been a very nice and interesting trade lately. Yes. So again, here we have our swing, reaches target 1, tralala, tralala. Yes. Okay. We'll talk about that in a minute. Give me a second. And some more interesting trades happen here. And this is something that I want you to have a look at. So this is dollar yen. Okay. Again, we have our entry by the book. The arrow comes. Target 1 reached. Target 2 reached. Yes. We say thank you, market. Thank you, Avramis. And then we close our position and we look for the next opportunity to trade the market, which comes here, and it's short this time. So we enter here, target 1, and now we are in with our stop loss. Let me find the position here. So this was our entry. Target 1 was reached here, and then our stop loss was there. And now we move our stop loss from there to the middle, and we are waiting for it to reach target 2. Is it clear? Target 1 is a resistance when you go up or a support when you come down. So in this case here, it's a support, it's not a resistance, yes? Okay. Well, the way we have the targets here, they take into account the spread, very good observation, but Mohammed, they take into account the spread because target 1 is not the Fibonacci 161, we put it 159, yes? And it's not 261, we put it 259, but very well observed, yes? So this takes care of the spread situation. Got it? All right, very good. So this is, in a nutshell, the Avramis Swing Indicator. Okay, you can use it on the long term, you can use it on the weekly time frame, for example. Yes, okay. So you can use it. Look at these beautiful trades that the sterling gave in the past. Nice. Oops, went too far back, sorry. Let it wake up. So the market is going up, you see the swing down here, and then we have another beautiful swing up here. Okay, and sorry, this means that I don't have enough data in my thing here, but here you have it. It's a special case double top, and if it comes back to its place, you will see the entry. Yes, okay, so it's a new platform and it's moving around because it doesn't have data. Oh, this was a nice trade here. Yeah, oh, nice. When did this happen? This is on the 4 hours, it says. Yes, again, our indicator will pop up the entry. Target 1 was reached. Now our stop loss should be at the entry level because we are very close to target 2. So we shouldn't have it in the middle. By now it should be in the entry. So rain or shine, we will have made something like 300 pips, yes? Okay. Well, of course it filters a ranging market because to have a swing, you need to have a prior trend, yes? As you see, if you remember, when we saw the euro on the daily time frame, it's gray because it's a range, yes? Okay, and you can even see it in the panel here where we have some indicators as well, but that's when you grow older, we said, okay? But I forgot to tell you that also the panel down there, when there is a trade like this one here, yes, do you see it in the panel? It's telling you there is a bullish failure swing, there is a score, the score is 7, so it's a good one. Anything above 6 is a good trade, okay? This is the entry, stop, target 1, target 2, and target 3. Okay, so now going back to what we discussed before, yes, the score is out of 10. So what we discussed before is that also the indicator can scan at the same time all the time frames you choose, yes? Here, I am asking it to scan at the same time the monthly, the daily, the weekly, the 4 hour, the 1 hour, and when there is a trade on one of the time frames, in this example, there is a bullish failure swing on the 4 hour time frame. I hope you can see it in the panel here. Yeah. And the score we said was 7, which is a good score. Time frame is 4, and tralala, tralala. Clear? And now the advantage that MT5 has versus all the other, the MT4, for example, is that it has 1,256 instruments, yes? So what the indicator can do is you can come to the indicator and you can make it work as a scanner, right? So the fun part now is we are going to go and we are going to scan the market, okay? And we are going to see if there are any opportunities happening right now. So it's going to scan all the instruments that I have here, which is 79 instruments currently. It's going to scan the monthly, weekly, daily, 4 hour and 1 hour. And it's going to bring for me all the possible trades that exist in these time frames. Yes? Okay. Do you need other indicators? Well, here it also includes the linear regression, the moving average, the MACD that you are familiar with. Yes, to find for you the score. So the score is based on indicators that it's calculating, right? So if you see here, we have a score that it's using the linear regression, the EMA, the MACD, and the concept about the trend quality that is designed exactly to do that, to tell you when you are in a range and when you are not in a range. Yes? Okay. So of course, and here it started now bringing the scanners. Of course, when you don't do a Zoom broadcast on YouTube and Facebook, it's much faster because it needs some internet to do it. But in a minute, it will scan all these instruments and start bringing results for us. So there is a bullish trend reversal on the euro yen on the weekly time frame. Yes. Ooh. There is a bearish trend reversal on NZD CHF. NZD CHF, it says, yes, on the hourly time frame. So, or we said we have the euro yen on the weekly, which is a very strong. So what we can do is we can go and put our one time frame swing here. Yes. Oh, nice. So look at this beautiful trade here, yes? What are we going to do in this beautiful case? So when the arrow is vertical, if you remember, we said that it's not a strong downtrend anymore, and if it goes above T1, it will reverse, right? That's what it means. In this case, it's a weak down, yes? And the moment it goes above T1, it will switch to up, Kojo. Got it? So this is a nice trade. If it breaks 122.85, target 1 is 126, and target 2 is 133. That's not a bad trade at all, yes? And we have a trade on NZD yen. So let's go and have a look at NZD. JPY on the 1 hour time frame, it said, yes? Okay, here it is. So here it's a failure to go higher. So you see the arrow is tilted because it's not a clear up now, because I have a top lower than the previous top, right? So I don't have a clear uptrend. And if it goes below this level, then we are going to go down. But I want you to also observe this. Yes, look at this. The score on this trade is 4, right? It's not the best trade in the world. Okay, so I will tell you the trick of how to use the score. The score, you use it to define the amount you are going to trade. Yes, so for example, if the score is 10, I trade 1 lot, right? If the score is 4, then I would trade 0.4 lots. If the score is 7, I would trade 0.7 lots and so on. You got me? So you can, the higher the score, the more the money you can trade. The lower the score, the less you can trade. Yes? So you can trade even something that has a score of 1, but with less money. Is it clear? Now, of course, there are many more signals that this indicator can produce for you, which is how to buy here and here, but that's when you grow older. So for now, I want you to focus on the trend reversals. Yes, so now I have it to only show us the trend reversals. There are many more strategies. Yes, we have breakouts, we have waves, and all these nice things. And when you scan, you can tell it, I want you to scan and find for me only the trend reversals that have a score of 7 and above. Yes, and that way it will not bring the ones that are lower score than 7. Or it's many things you can do, but I mean, it's only a 1 hour seminar. We will do more, and we are preparing a video guide that will explain everything that goes with the indicator. It's actually a home study course, yes, that will describe everything that you can do. But for now, let's focus on these signals. Yes. Okay. So at this point in time and space, these are the signals that we have, but we can always add more instruments, and we can come here and we can scan all the shares that exist on this platform. But unless you have a super fast computer, I recommend you scan them 100 by 100. Yes, so you can create sets and you can use them here to scan. So Poland 20 cash has a bullish trend reversal, and you can of course add more time frames to scan. Is it clear? Yes. Any questions now? Let's go to the Q&A part of the course. Oil. Yes. Let me find oil. Where is oil? I don't have it here. We'll find it. Oil. Okay. Here is oil. Okay, so what's the trend in oil? It's going down in a blaze of glory, right? Sorry, it's a new platform and it doesn't have the data. Let me get it easier if I get it here. Okay, so oil. What do you want to see on oil? S&P will never find a bottom. Okay, so until this gets some data, because it's a new platform that I downloaded and it doesn't have the data. Okay, here they are slowly coming. So when the first time you have the platform, then we also give you a looper tool that will go and download the data, but to be honest, I forgot to run it on this new platform. That's why. Okay, so oil. All right, so we had a swing there, from there to there. Okay, so the target is 1675. That's target 3. No, actually, that's the extension of the target. Yes? So it reached target 1, it reached target 2, it reached target 3, and that's definitely not for you, but that's where it's heading now, around 17. Yes? That's what we get from the daily time frame. Of course, on the weekly time frame, we had this nice swing here. It reached its first target at 28, and the next one is 380. Oops, that's a bit down. So, of course, these are the big moves that have been happening these days. If we go now to the 4-hour time frame, for example, it's still a downtrend. Yes, nothing is changing it. It's a clear downtrend. Tra-la-la. It started a long time back. But let's see this swing here. Okay, this is, of course, when you grow older, but you see how nicely it reached target 3 and then it went up. So oil is going down in a blaze of glory. And of course, we had some nice trades like this one here. It reached target 1. It just missed target 2, and then it hit you on the break even, and then it continued with its downtrend, going down in a nice blaze of glory. S&P, okay, so S&P, has the S&P found a bottom? Okay, you tell me, did it find a bottom? What is the trend of the S&P here? It's top, bottom, top. Yes, well, it found a bottom, but it's not the bottom. Yes, okay. So what do we expect it to do? We expect it to go higher, maybe stop here, maybe stop a bit higher, and then what is it going to do? It's going to continue going down. For how long? Forever. Excellent. Unless we see a swing happening before that. Is it clear? So on the long-term time frames, on the weeklies down, on the dailies down, this beautiful swing up here that was done, it reached target 1, it reached target 2, it reached target 3, and look at this, it reached our extended target, which is this one down here. Let me put it more correct. Yeah. Okay. And now it's correcting higher, but nothing has changed this downtrend. Yes, we have a swing up here to go long, right? You remember this swing here? Okay. We had an entry signal to go long on the hourly. Clear? But this is going against the higher time frames. And look at the score of this trade. The score is 2, yes? Okay. So not the best trade in the world. Got it? Why? Because when we trade, it's better to trade in the direction of the higher time frames. So if the higher time frames are down, going against them is not that good. So it's better to go with the direction of the higher time frames. Now, Bitcoin, I don't think so. We have it on the XM platform. It's not available, so we can have a look at it. Okay, so how to get the indicator? Okay, so look at this. The indicator, you can just buy it for $500, yes? Okay, so if you like the indicator and you want to buy it, you can pay us $500 and you can buy it. However, because we, as I'm sure many of you know, we work with XM, we are their educational provider. So you can get it free by opening a real account with our partner broker through our Tradepedia link and deposit $1,000 in it, and you get the indicator yours. Yes. So basically, you get it for free because the $1,000 is tradable money. It's money that you will use to trade anyway, right? So in essence, you can get the indicator for free just by opening an account and depositing $1,000 in. Is it clear? Yes? Or if you want, you can buy it for $500, but why? You can just deposit $1,000 in the account and you have it, yes? And it's superior because the MT5, as we said, for example, is superior because you have this beautiful scanning ability and you can scan all these instruments that are on your indicator, yes? Yes, as I said, it will come with a video guide, but it's not quite ready yet. But whoever purchases it, this indicator, we will have another online session like this, and we will help you set it up and show you how the indicator specifically is used, yes, and what settings you should have to get the best out of this indicator, yeah? So after we get people subscribing, we will do another online session where we will explain how it's used, and we can record this session and give it to other people as well, yes? Well, the Avramis River indicator is another indicator. It's a more simple indicator. I don't know if I have access to it. Me personally, I don't use it because I prefer the swing, because the swing will find for you the reversals in the market. Yes, the river will help you to go with the trend. Yes, haha, Mohammed, wave entry. Where did you hear this thing? Well, the wave entry is another type of entry that is included in the indicator, but not at your level. You need to know how to use it. Okay, so the indicator is going to be locked for this one. So come on, you are not children, but we will tell you what is better to use and what is not. But in essence, what the, let me find the board here and I will tell you. New share. So I will share the whiteboard. So can everyone see the whiteboard, I hope now? Yeah? Can you see the whiteboard? Yes? You see the whiteboard? Okay, so basically this is the trade. Yes, the market is coming down, right? It goes up, comes down, and this is my reversal. I would buy here, yes? And then you would have to take your profit, let's say here and here, and then you wait until the market reverses again, and you would short here, and so on. Now, the wave entry is the type of entry that will allow you to buy here to target here, yes? Or to short here to target here. But that's more complicated and requires much more discipline to apply it correctly, okay? So remember, when we learn by gradient, yes? Now the trend reversal is the most accurate entry that we have. As I told you, on the daily time frame, it's 80% accurate. On the 4-hour time frame, it's 73% accurate. On the 1-hour time frame, it's 70% accurate. Yes? Okay? You get me? So the wave entry makes more money because in reality, why does the wave entry make more money? Because you are risking a smaller amount to make more, but is less accurate. So let's stick to the trend reversals. And if you wait for the correct trend reversals, you will be just fine. Is it clear? So step by step, let's focus on the reversals. Yes. So every time we see a reversal on the indicator, I mean, for example, let's take the sterling on the 4-hour. We didn't see this. Yes. Oops, sorry, too much back. Another nice, beautiful entry. So when you see this signal, okay, all you have to do, we saw it actually, entry, target 1 reached, you put your stop loss at the break even now, and you are happy. Or you could, as we said, actually put it here, yes? Okay, and you can scan the markets, you can scan all the instruments here to find potential trades as they happen. And I know that many of you are more fond of lower time frames, let's say like the 30 minutes or the 10 minutes, 15 minutes. Yes, you can still use it on these time frames as well, but you have to have in mind that they are less accurate, and also the spread that we have, the spread becomes more expensive. Yes, sir. So for example, this is the 15-minute on the sterling, okay? You see your signal. What is it? It's a bearish trend reversal. What is the score? The score is, where is it? The score is 6, not bad. Yes, okay. So you take your entry, right? Let's see what happened after that. All right, it reaches target 1. So at least from the moment it has reached target 1, you know that you are not going to lose any money. So it reaches target 1, then you move your stop loss. From there, you would move it to the 50%, which is somewhere there. Yes, just got lucky there. Let's see what happened. And there it hit you. Yes, is it clear? Well, at least you didn't lose. And down here, we had a nice swing. but this was a special swing and the indicator did not get it for you. Remember, you are only allowed to trade the clear ones, yes? Okay, so as long as you trade the clear ones, you should be fine. So like this one here looks to me crystal clear, yes? So you get your signal, target 1 reached, target 2 reached. Remember, target 3 is for me. But look, this is the 15-minute chart, by the way, yes? And look what happened. It reached target 3, and then it went up. Clear? And I'm sure if we go back in time, okay, this is another example. We have our trade here, okay? This is the entry, okay? And look what happened. So don't be in a hurry. In this case, it went up and the trade was canceled, yes? So if you put the entry here, it was never activated. So you would never have taken this trade. So don't be in a hurry to take them. But if you come here again now, what do we have here? We have another trade, target 1 was reached here. Where is my thing? Target 1, and let's see, did it reach target 2? Ooh, target 2 also reached, and of course, don't forget target 3, which is only for me, and look what happened after target 3, yes? Okay, clear? Wissam, what is PA? Coronavirus reflects on the market. Who cares, Osama? Yes? Who cares about coronavirus effect on the market? Look at this. This is technical analysis, does not care. Yes? Yeah, coronavirus. Okay? So I trade, I make money, right? What's the issue with the coronavirus? I don't get you. Swing there, you trade it. So coronavirus is actually increasing the volatility in the market, but it does not change the signals. Actually, it makes it more fun. Got it? More signals. So you can go for the good ones, for the high score ones. Is it clear? Here's another one here. So there, what happened? It reached target 1 and then it came and maybe stopped you. If you didn't manage to close here and you closed on the next one here, then target 1, target 2, and then tralala, tralalo. Is it clear? And then you have another one here. Where is it? I want you to pay attention to this here. Yes, we get a signal here, right? And it didn't go and hit our stop loss, right? So we are not 100% accurate, but this one here worked just fine and reached target 1 and target 2. And then after that, what happens? Nothing and nothing and so on. That's why the good thing is you have the scanner and you can scan all the instruments to find the best trades. Got it? So here again, we have the Aussie dollar, but it didn't give a signal here because there was no downtrend before. So no signal, no trade. Let other people take this trade. Is it clear? The monthly reversal on DAX. I don't think there is a monthly reversal on DAX. Ooh, actually there is. Nice one. So what do we have here? we have a monthly reversal, and look at this, it reached target 1 and then it bounced up. Yes, is it clear? So that's not a bad trade at all, and the score was also 7, which is a very good score. Clear? Okay, any more questions? All right. Oh, Palladium, sorry, Palladium. You have any time frame in mind? Well, when we start our analysis, we start from up and we go down, yes? There was a swing below B2, but that's a special case swing, is not for you, is when you grow older, okay? And the 4 hours is a U, you see, it's a range, it's unidentified. And if we go to the 1 hour time frame, what did we have? Anything? Well, we got, I guess, a lot of trades around the area. Maybe here is one trade. Okay, so yes, here we have one trade. Oh, nice. Target 1 reaches target 2 exactly, and then it goes up. Yes, and then it continues the downtrend, which is another story. Now you see how it is in a range. It's a U, has a score of 0, so nothing to do there. And then the market clears again, and we have a range again, and then there was an entry, but it's not a reversal in the sense of a reversal. Yes, so you see no trades were given on the Palladium, but it's okay. There is another 1,256 instruments to trade Taha. Yes, the most important thing to remember is we don't fall in love with instruments. Yes, okay. So I know many people fall in love with gold. Why? Because last year it gave me a lot of money, so it's going to give it to me again this year. Yes, well, it doesn't really go like this. Yes, so yeah, I understood you are sort of in love with Palladium. Yes, but this is the beautiful thing of having a method, right? It's not clear, we don't trade it. We scan the markets and we go and trade something else. Yes, I mean, I don't know. I didn't see Facebook lately, but maybe we could trade Facebook. Yes, okay. So let's change time frame and make it to the 4 hours. Okay, did we get a signal here? Let's see. There you have it. Yes, so you could have bought Facebook at 159.81. Your stop loss is here and you are still in the market trading. Observe that the score is 4 because the general trend of the market is down. Yes, look at this beautiful swing that we got up here. Yes, let me zoom in because it was fast. Okay, so here we had it was with one candle reversal. So here we had our swing, it reached target 1, then it didn't stop you on target 2, and then it reached target 2, and it even reached my extended target, which is another story. Yes, okay, so don't fall in love. This is the beautiful thing about the scanner. Yes, anything, we trade anything that is good, anything that gives us a good signal, right? On any time frame, preferably hourly and above. Yes, is it clear? There's no trade here, fine, no problem. I will trade another instrument, another time frame. You got me? And of course, remember, there is more strategies that we didn't learn today, like how to buy here. Yes. Okay. So when you grow older, you can learn that you could have bought there, and you would put the Fibonacci from there to there, and you would close half your position there, and tralala, and so on. Yes, but guys, relax. Okay, just stick to the trend reversal, and you'll do fine. Okay, so let me remind you again. So if you want the indicator, you can send us an email. These are our contact details. Oh, I'm sure you have already gotten an invitation. So you can scan here, and you can also join us on YouTube, on Twitter, on Facebook. Take a picture of this slide, okay? And you can contact us, and we can arrange for you to get this lovely indicator for free, as we said, as I'm sure you are all trading. So all you have to do is deposit some money in your account, and you can get it. All right. And last but not least, we also have started a Telegram channel. So take your mobile out, scan this QR code, and let's see how many of you join the thing. Mohammed, you snooze, you lose, as they say. Yes, you came late. You'll have to wait for the next one. Unless we have recorded this, I'm not sure. I'll let you know. But in any case, scan the QR code here to join our Telegram group. And we will do many of these sessions again, as we are all in lockdown, and this is the way to connect to people. We've been doing it forever, but now I'm doing it as well. Okay, so here you can join our Tradepedia channel, and someone is writing on my board. I will mute him. And you can go to our YouTube channel, where we have many videos, and you can also watch our videos and see how we use Fibonacci and tralala, and how you can scan the market. Now I'm going to run a scan through the market and see if we get anything interesting. I will put the weekly, the daily, the 4 hours, the 1 hour, the 30 minutes, and let's see what fish we catch. Yes. Okay, so we are scanning already. We have euro yen on the 4 hours. Ooh, we are scanning already, guys. So let's see the trades of the day. Ooh, more trades are coming up. Holy, we need more space. So if we need more space, what we can do is we can increase the number of rows that the indicator will show us, or we can change page, but I think this will do just fine. And so I use this to scan, and then I will take the euro yen now. I will open a new chart window, and I will apply my non-scanner, let's call it Avramis Swing and have a look at what's happening here. So on the 4 hours is saying that we have a bearish trend reversal. The entry is 118.79, and here it is. Yes, getting ready to be activated. And tralala, tralala. So this is one potential trade. So you see, there's no need to trade palladium only or gold only or whatever only. Yes, this is the beautiful thing. So we scan the markets, and remember, this is scanning only for trend reversals. There is more strategies to learn, but these are good enough. And we have the sterling yen on the 30 minutes, which is also ready to give us a reversal. Let's have a look at it here. There it is. What's the score? The score is 7. It's not a bad reversal. It should at least go to target 1. So we can enter our order depending on your money management and the balance of your account. That's another session for another day. Okay. And you can say trade one lot. What's the entry? The entry is here, 133.39. So I will go to a pending order, a sell stop. I will enter one lot. The price is 133.39, and the stop loss is 134.26, and my first target is 132.88, and I place the trade. Yes, I hope it's a demo account. Yes, it's a demo. All right, so we enter the trade. Apparently I have an older trade here. Let's close it. So this is my placed order, but now look what I'm going to do. Because I wanted originally to trade 2 lots, what I'm going to do now is I'm going to enter a second lot, again a sell stop, again at the same entry price, 133.39, with the same stop loss, which is 134.26, but this time with target 2, which is 132.02. Okay, so now I have placed both orders. Now, once they are executed and it reaches target 1, what will happen? The first one will close automatically, right? And then all I have to do is come and change the stop of this one to the 50% trail over there. Got it? So this is one trade that we could enter. And what other trades are popping up here? We have Euro Ruble. Okay, that's too exotic for me. Sterling NOK, NZD JPY, GBP SGD, GBP AUD. I see a lot of GBPs for short, which must mean that the GBP USD must be a bit under pressure, but still there is no signal on the GBP USD. You see, there is no signal on the sterling dollar, but we get a signal on sterling yen, on sterling AUD, on sterling SGD, on sterling NOK, and so on. Clear? So we don't fall in love, we just trade. Very good. So again, this is our channel. Where is our channel? So join us every now and then. I post some nice analysis here, but of course, with you having, if you get the tool and you have the tool, you can do it on your own. So as we said, this is the channel and this is how you can get the swing indicator. All right. Okay, so now because it's curfew time here and I have a license to move away from the office to my house from 9 to 10, I'll be getting along. So thank you very much everyone for joining. I hope you enjoyed it. And oh, excellent, Emil. Definitely will have dinner with Habib. Excellent. All right, guys. So see you in the next session. Don't forget, you can get free the Avramis Swing Indicator just by depositing $1,000. So that's a very good opportunity. Don't miss it. No, Sama, not yet. We don't have one in Arabic. It's only in English currently. But I think the indicator speaks Arabic. Or maybe not yet. Let's see. No, we didn't teach it Arabic yet. All right. Thank you so much, guys. Have a great day. Bye-bye. Thank you. So the email is info@tradepedia.com. Yes. So you can email us at info@tradepedia.com. Yes. All right. Excellent. Ciao, everyone. Bye.